Right. How y'all doing today? Just want to go over some TA on Clover Health. Pretty quick. Not going to really do too much explaining on the chart. We'll save that for another day. Um, some levels and some of the things that I think that's going to be very important with the next coming few weeks. Earnings for Clover Health is, I believe, on the 12th of next month, August, right? It's going to be a completely fundamental driven technical analysis. Has barely anything. I mean, just the direction is probably the best thing to keep an eye on until after the earnings report is said and done. See which direction everything's headed to. I mean, it could be a possibility that this run from 60 cents up was you know anticipating a good earnings report coming up. Shorts were leaving. I don't think any I don't think anyone came in and started buying heavy. I'm thinking maybe the price movement that we're having to the upside is shorts covering the positions, getting out before things start getting really thick, right? Start getting to the thick of the positive earnings, the free cash flow going positive and, the earnings per share turning positive, right? And all the good news that we've been having, right? Like the $20 million buyback, the $1 million purchase that we had, right? Vivek. I mean, hell, if you do your research, update research, you you and I know we're here for the same reason that 10,000 Americans turn 65 or older every day. Well, we're kind of coming to the top part of that slope where the baby boomers are been you know were mostly created, right? So I believe it's 11,200 now. So it's starting to grow exponentially. Um, and we're just on the beginning of that upward slope too. So this is just the beginning. And then we got small caps. But the money's moving out of large into small caps, and that makes sense because there was only a few large caps holding up the whole market, right? It's heavy weighted in the S&P and Nasdaq. Unfortunately, Dow Jones probably going to suffer the short end of the stick on this next run when small caps take the lead. That that's what I think. Um, but yeah, there's a lot of positive things to talk about. I think the Clover Health is the no the counterpart assistant could be contracted out, say Humana or United Healthcare or maybe a smaller company that needs it, or how about a country that needs it? How about a country that's underdeveloped, a third world country, right? That needs the Clover assistant, but will settle for the counterpart. You know, there's Mexico might be one of the simplest ones to help out with that idea, right? And maybe Canada too around there, but they're not really a third second world country. Right? But you know where I'm going with this. It saves money, basically, right? It saves cost. And, we got the increasing population with the elderly, cost is going up, inflation's through the moon. And historically, you know, um, there's there's also a negative factor. When the Fed starts to do QE, I believe the stock market crashes, um, and then it finds a bottom, and then it starts going up again. But small caps usually take the lead when quantitative easing starts, playing a part of the money printers start kicking on, and you go brrr, right? So let me see here. Turn this camera on. I don't have my computer on top. So fortunately, I don't have enough cash flow to have all the things I want, but I have enough for the things that I need. because you can only afford what you need, right? Um, let me see here, but there are a few points that I want to make of the TA. So yeah, right now TA is irrelevant until after earnings, but it's still it's still relevant in general, right? So we are on this upward trend, right? Right here, and I'm believing we will have a positive earnings report. We went another positive thing. We went back up to 3.5 stars, right? So that's another positive thing amongst the other ones, and I think they're going to keep on coming. You know, as time moves forward. So let me see. Yeah, this right here, I believe there's going to be consolidation going on. The tipping point is going to be where the earnings report comes out at. It's going to either send it up, and the price is baked in. It might pull back. Lowest I think we're going to go is going to be anywhere between $1.40 to $1.20. I don't think we're getting any lower than that. If we do, manipulation is, it's been a part of Clover Health for a long period of time. Look at the 3-day chart. I would have it on the weekly, but there's not enough data for my indicators or for my technical analysis to work correctly on the 3-day chart. I mean, on the weekly chart, so I use the 3-day chart as of right now. The next year or two, it won't be necessary anymore. But, you know, look at that. This is the IPO, so I mean, we should at least make it back up to that before before we go free cash flow positive. I would think, but there's no telling because pendulum swings to one extreme and then it swings to another extreme. And if you remember correctly, um, that money can't be made until there is a price value of $30 per share for over, was it 90 days or 30 days or something like that, for a good period of time. So we should see higher highs, and there's only a short window of time left now. I think it's only like 2 or 3 years. You got to go back and do some more, you know, re-update myself on that information. Um, but yeah, they the price is probably going to get well above $30 um, before this decade is over with, and we're already knocking into that middle of the year. We got 5 more. You round up. You got 5 more years to go before the next decade. So I believe we'll be well over $30 before this decade is over with. Um, Now price resistant zones. I see they're going to be the most challenging to break. Is going to be this $10 one, and this one right here for was it $3.50. I see that to be the most challenging as of right now. But you see this big hole right here, this big hole. It's like a gap, like this gap right here, right? I feel like this whole thing is just one giant gap. I don't know why, but I think once it breaks out of like the $3 range going to the four, it's gonna shoot up to fucking like maybe the top of this one right here, like 750. It's gonna go from like $4 to $7.50, quick, quicker than anything else has moved, quicker than the down gaps that we had over here, quicker than that. Um, Let me see. Okay, so I got the algos, and they're not really important. If you got like this fundamental scenario playing out right here, These things ain't, they're not going to be too useful. The overall direction is like this trend right here. This is useful, right? So you say the quickest time frame that we could get to this zone right here, which is where I consider the pretty good resistance at, right, is going to be no later than, was that February the 11th? No later than the fourth quarter. I mean the fourth quarter, the first quarter of next year. Yeah. So no later than that. We should have it in the beginning of the year at the minimum, I would think, right? If it follows this trend, if the earnings reports keep on coming out good, there's no dilution, right? There's buyback. So it's the opposite of dilution. It's buying back shares, not diluting. So, right? Um, they need to find something else. Was that something that always bothers me? It's like the compensation, the share compensation for employees. That doesn't work for me. I don't like that. It's because it's like another version of dilution without, it's like a hidden dilution, right? So I don't like the way that's worked. You give them bonuses or something if the stock price makes it to a certain level. Do something else. Don't take away from the shareholders to put in the pockets of the employees that work there. If you're going to do that, don't have it involved as the stock is struggling. Give them some kind of like reward for working for the company for so long that they can get shares after a long duration. Give them give them something to work for. Don't just give them it. Don't just say, "Here, man, I hired you, so there you go, some shares." Oh, say, look, you're gonna have to be here for do a really good job for like a year, maybe 2 years, and then you're gonna get this bonus here of 100,000 shares or something like that. That makes sense. But to hand it away for free right there in the very beginning, I don't like that idea. So you need to work for it, right? You could quit and then cash it out. That's the way it looks. Quit, I'm gonna leave, but I'm gonna take that freebie with me. I didn't do anything to deserve it, but I'm gonna just take it because I got hired. What is that all about? But let me see here. Yeah, so we just got. Okay, so we go back to the weekly over here. Let's go back to the weekly. Right there. You see this downward trend right here we were in, right there? We've been in that downward trend for a long time. Started stopping and came to a halt right there at that 60 cents level, the level I wish I would have bought some shares at. And it broke out of it. It got over here, you know. Now it's at around $1.67. The longer it stays out of this region right here, the better. Hopefully, we don't get something like a drop back into it, because then that would suck. But it could just be an overreaction or something. We could always work our way back out of it. We already pretty much got a floor going on here at 70 and 60 cents. So that's a really really good thing. Um, Now, cycle analysis is about timing on the weekly. Go back to the 3 day. This is when the next cycle comes to an end, right here, right before the earnings, right? Because it's on the 12th. And this one right here is pretty much where the weekly and the daily line up together. So this is going to be a significant area. If the cycle don't adjust, sometimes they tend to adjust. We'll move a little bit to the left, a little bit to the right, we'll expand or shrink just a little bit. But if they do, then things are going to have to get changed, right? You have to always optimize. Everything that works is perfect the way it is, but everything can work better than the way it does today. Optimization. Let me see here. So I got this little wave right here going. I noticed a pattern on this here, 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 here. Once there was this change of character, right, and the price actually started moving up, and it got this validated support right here, the buy indicator, right, and we started seeing the waves move up. We started seeing it go into positive territory, right? Money flow started turning green, right? Whale pump started coming in and talking about whale pump. Let me show you what's so depressing on the weekly that I figured, hey, man, we might see 20 cents, horrible. We might see 30 cents, 40 cents, horrible, you know is that every time we have the whale dump come in again and again and again, right? It's just crushes you down, right? So there's no running away from that shit, right? Um, Fortunately, we did get to see a whale pump up, up, and away. So we only had a little bit right here back in August of last year. It only lasted for a few weeks, maybe 2 weeks max. That was it. And that was at the top, right? That's horrible. That's so bad. But we had this one start around the middle compared to where it's at today. So it's kind of at the middle. So it's pretty damn good. Like to see more of these blue light bars pop up though. See more of them. Get to that $3.50 range where that strong support, the strong resistance is at. It's going to be support one day though. It's going to be support. So the cycles was meant for timing. So like I said here, earnings all fundamental. Wait and see what happens. Technicals on the back burner. We're waiting to see. You're going to pay attention to technicals. Pay attention to the minor stuff, right? The small stuff. Like right here, this little wave. It's how it goes up and goes down right here. Right? It's the small stuff, right? So this would be a good buying zone. Right here, where it started going sideways. Started clustering up a little bit there, right? That's where you want to add to position. You start seeing it's going down. It can't go down no further. This is where the support on the trend is, right here and here. So it's holding. It's going to be a positive thing. It's starting to turn up, right? Then you go to the cycle analysis. Right hand translation. It's going up. That's the direction it's headed to. That's the direction up, right? So the trend is your friend. Just like the trend was your friend over here, let me show you. Even if you would have done an intrinsic value calculation, even if you would have done that, right? The trend is your friend. You just got to do average in, dollar cost average slowly, right? See all that? This is the trend. Negative, negative. And if you look at it from a weekly perspective, over here, this was the trend right here. This whole thing. There was that moonshot, but probably the trend probably kicked in right around this area. Look, staggered out right here. So yeah, the trend is your friend. This is the buying opportunity. Over here, it wasn't really one. I mean, look, you do an intrinsic value calculation, you have the SAS multiple, right? You're not thinking ahead. You're not playing chess. You're playing blind man checkers, okay? You don't know that, the Federal Reserve is about to start increasing interest rates. You don't know they're going to keep it higher for longer. You've never been in the stock market for maybe about a year or two, right? You don't know, you've never seen a bear market. You don't know any of this. Then you're the guy who would have bought here. Like why did SPACs even become? Because quantitative easing, because money was cheap. That's the reason why SPACs got out of here. It's one of the byproducts of having, cheap money, right? The market was just getting all of these, just randomly popping out of everywhere. So it doesn't happen that often. At least for my research, it doesn't. People got blindsided playing fucking chess with the blindfold on. Not chess, checkers, the blindfold on. So unfortunately, it sucks. Well, it's a learning lesson. Thank God we can learn something, right? Um, let's see here. Yeah, the waves are here. So here's another thing. This is where we're at. This is the daily one, right? Let's turn this back to the 3 day. So yeah, we got the 4% here. That's an important one. 2%, 2%, not so much. This one has a lot of selling pressure, and this one had a lot more buying pressure, but this was greater than that one by double. So yeah, that's a 40. I mean, a 54 mil. This is 108 mil, right? So I would say that that's going to be more. That's going to be a zone to watch. It's more important, more relevant than those. And then the next relevant one we have is what we're currently at right now. You see this three? Let me stretch it out so where you can see it. Right there. See that 3%? We had 4%. We got 1% here. 3% is the most relative resistance that we have, and we're currently right bumping against it. Well, doesn't that make sense, right? Okay, so let's see here. So we should see some consolidation. We need to find support. Like I said, it's going to be anywhere from $1.20 to $1.40. Good earnings is going to come, and we're going to see this action, this ghosted arrows in the background. We should see this manifest. If not, if this is good earnings being baked in, then we're going to see this. I think we're going to see that, unfortunately. But we will find. I don't think it's going to go any lower than 120 though. So right there, that's where I believe we'll find support at. If we do, hey, you know what? Clover Health has been manipulated to the downside ever since the last time it was around $8. I think at that time $8, even with the SAS multiple. Well, it had a high SAS multiple even back then, though. It was considered fair value, with an intrinsic value calculation. But the daily cycle right here, we got the intermediate one on the inside of the daily. That's what you want to call it. You got the shorter cycle. You got the inner cycle, right? Um, on the daily, and then you got the daily here and the weekly here. The only time they actually get really close, and the time they get in sync with one another, right, is no, they do it here too. Okay, that's going to be June of next year, and that's going to be November around. Go ahead and split it in the center somewhere. On the first or second week of November, but this is my little buy zone area here. If it follows the algos in the cycle analysis, I believe that this right here, I'm projecting a green up arrow, right? I think, yep, that's where the bottom is going to be for the most part. That's if it'll rip and stay within this trend and continue going forward. That's if it dumps and stays low. So that's an area right there. I would be looking to buy, right? Um, let's see here. So all of this right here will be considered like a risky area. That's the reason why I got it yellow circle. If you look at the algos from here, they pretty much fall into really good risk on, right? About, well, starts off right there around earnings. Right there around earnings. And I would not trust the algos or the cycle or anything or any kind of like projection for price movements or anything when it comes to a fundamental report. That's like asking. That's like asking for it. It's like say, hey, let me end up with a problem here. Let me try to anticipate a negative thing from a positive thing, right? End up in a dilemma. So, anyways, these are like take profit zones. This is 1, 2. That's the trend continuation mark right there. Upward trend, positive cash flow, negative cash flow, extreme negative cash flow. These are the waves. You can see here, it does a good job at clustering these waves right here. When you get a clustering scenario, like how it is right here, you really can't tell if it wants to break up or down. It looks positive. I mean, from here, from hindsight, it would look positive, right? Until it turned negative, and then it already had its move down. But if you look at the waves, they were predicting it was going to move down way before it did. Days before. 1, 2, 3. And they keep on giving each other, conviction over and over because the next wave moves down, the next wave moves down. So even though it was a slight pullback, sometimes it's, steep, other times it's not. Sometimes it's like quick, sometimes it draws down for a while. But it's about, being able to read it, being able to see it while it's taking place, not being delayed, not was it a delayed indicator, right? More responsive indicator, right? Or something like that. Same goes for here with this red right here. This is kind of like a cash flow to the extreme, being dumped, right? Positive, being pumped, right? So I knew we were going up right here during this time frame, which was around May. I knew that we were starting going up, but what I did not know is that we were going to go up this high. I did not know we were literally breaking out. I did not know that. Well, I did know that we were going to go up. I figured we would go down again somewhere, down maybe 40 cents. Then I would buy, right? And that didn't happen. So, hey, that's what dollar cost averaging. That would have prevented me from not getting shares at 60 cents. That I want to be picky, but it has its ups and downs. It does. Let's see here. Now that we got more data at 60 cents, I highly doubt it would try that shit again. Let it try that shit again. Let it try that shit again. We'll see what happens. Shit. I know exactly what I'm going to do. Now, there is another thing, too. Like, you see how I got this little triangle right here? I figured price is going to consolidate until earnings. Once we get a good earnings report, it's going to pop up and continue to follow this trend in between here and here, and then eventually make it up to 350 before no later than um, January, February of next year. Um, but if not, there is another scenario that I can see manifest. Where is the trend? Okay, so just like with this one and this one here, the earnings, right? There is a greater one here with the algos and the moving averages right there. So there is a chance that it fails, and when it does this right here, I believe that it will pass, like I said before, down here. Um, it will consolidate into here, and then here have a breakout, just like how small caps broke out of that. Let's go over here. Just like with small caps, this triangle right here, they broke out of that. That will probably happen here. Boom, there, during around this period. At least that's my second bullish case if the first one fails. Um, so yeah, we the 3 days starting to go positive with money flow starting to become positive. Thank God we started seeing the whale pump indicator show positive instead of negative for so long. Look at all that negative. Right? Look at negative, negative, negative. Every time this happened, bad things happened. This happened, bad things happened. This happened, bad things happen. Right? And positive things happen when you get this going on. We only had just a tiny bit the last time, just a tiny bit, and it was at the peak of price during that price action right there, during that move that it had. But yeah, so we'll see what happens after earnings. Overbought 63% over here, 100% on the weekly. Maybe some types of consolidation or something going on. Looking for anything around $3.50. Huh. It changed. It was right here earlier. I wonder why it did that. Was it $10? Oh, you know what? Duh. Because I was on the 3 day. Yeah. Okay. It had me guessing though. It had me guessing. So, anyways, we stay in this trend right here on the weekly. That means the latest. Let's see if it lines up with the daily. So the latest we can get to $3 and something cents would be October the 24th. And this one says where is it at? February. So yeah, this one's quicker. The weekly one. It said a sharper slope though. This one's wider. The quickest it says it's going to be October. Yeah, October the 30th, and this says the quickest. September, the latest. Yeah, October. Yeah. Well, that's the TA. Can't get no better than that as of right now. All right, guys. I'll see you on the next one.